Alright, fellow traders, welcome once again to my platform where Forex is made easy. At least you are going to get the simple explanation that you can never get using just what is actually happening. Today we want to talk about some major pairs before I move to set the other terminologies. Then we'll be done with the intro. My target is actually the analysis part, but before we get to that point, at least you have to understand these things. So the major pairs, we've already explained what a pair is, that they actually involve two symbols, two currency coming together. Either you are selling one for the other. If you are buying dollar and you are using cedis, that is the USD cedi. If mostly if we are listing the pairs, we bring the major one first, like the symbol that is strong. Yes, so if you are taking euro and dollar, like assuming you are outside, so this is the base currency. Yes, so the euro against the dollar. These are the major ones are the most traded currencies in the world. Yes, so these are the major ones. AUD, Australian dollar against, you can look at this, at least the meaning to the pair, and know what this stands for. The CHF is the Swiss francs. Yes, and the AUD, as I explained, Australian dollar, NZD, New Zealand. The CAD is Canadian dollar. Those are the major pairs. With time, you are going to at least get one of these and trade with. Aside maybe trading gold and the other pairs, we have other minor pairs. The minor pairs comparing euro to pound. Mostly trading on this, like very minimal, like many traders are actually not interested in, by some of them too, especially if you take pound JPY and euro JPY. Many of the is one of the favorite pairs for many, especially pound JPY GG. People actually love it. So these are the minor pairs. All right, so once we go to the charts, let me close this. Okay, let me turn my indicator off. I wanted to show you the session, but this is not the major concern for it. So once we go to the chart, we see that there is always price movement. Price is moving from a particular point, let's say around this point, which is 1.34095, then to, let's say, this point, 1.34374. So once price moves, like it moves in points, and when price moves in that manner, if you want to measure the distance, we measure it in pips. We want to measure the difference in decimal point. We measure, it's like measuring the distance from here to this side. We just measure it in pips. So if I take the measure and I click here to this particular point, yeah, so this is actually we have 19 bars volume and 28.6. We are just getting, the volume is actually representing in terms of money and how people are in. Yes, and how volatile it is. Yeah, and for the bars, we will come to it later because that is not the concern here. So if you are measuring pips or if you are calculating pips, pips are just the distance, the decimal point between two prices. So if you take Euro USD, maybe price was around this level and it moved to this price. It started from here 1.1000 to 1.1001. The difference is the last one here, and that is the 1 pip. You understand? So it means price moved just a point, just 1 point, and that point, the percentage in points, is what we are calling as pip. Mostly the prices are recorded in 4 decimal points. So you can see most of the pairs, except the pound JPY, where they are in 2. So here 1.100 to 1.1010. You see, so the difference is the last, that is the pips. With time, you know when to use these pips. But because we'll be using a lot of, if you are placing a trade, at least you have a calculator to calculate your stop loss and your pips. You don't have to worry about the calculation, because that was before. People used to at least take these things very, very serious in terms of pips, but the target is the amount you lose. Once you're able to at least position your stop loss around that session, you have that particular amount. The next thing is the lot size. The lot size is the size of your trade in Forex. So as you see, Forex is traded in standardized contract sizes. If you talk about the standard lot, it is 100,000 units. Mini lot is 10,000. All these things, you may not necessarily have to put them in mind, but at least when you get to know and understand these things, it is also helpful, especially once you take a challenge and you are being interviewed. Yeah, sometimes some of these questions come one-on-one and you can explain to them. But the lot size is actually, it also reflects the amount you lose. We just compare the lot size to the pips. Maybe if one lot size per pip movement is $10 or $1. If you take one lot size and the pip movement is just $1, it means if you are using one lot size and the movement is 10 pips, you are going to multiply the 10 by the 1, meaning in some small movement, maybe 10 pips, you are going to lose $10. So the lot size actually helps you and guide you on the amount that you use. And the leverage, the last one is the leverage, what I want to emphasize on, because here is critical. If you don't have certain amount in the market, you can't trade. Yes, and because of that, this part too is also very important. The leverage is actually, if you are leveraging something, what does it mean? Like you are basing on something to get something. You understand? You are just taking advantage of what you have. Let's say if I have a cocoa farm, maybe the farm, I can use it something like as a mortgage to get something that is bigger. By here, what here means is if you have $100, let's say if you are having $1 and your broker is offering you 1:10, it means they are saying if you are able to raise just $1, they will allow you to trade times 10 of it. Any amount that you raise, they will allow you to trade the yes. If you multiply it by what the broker is also offering, that is what you are going to get. So if it is 100, it means if you are having $1, the broker is allowing you to trade a capital of 100. Maybe the forex market, a particular pay, if you don't have that particular amount, it is very difficult for you to trade, especially with Bitcoin. It requires a lot of leverage. So some people prefers going for higher leverages, but as far as leverage is helping you, it can also kill you in a certain way, because it is just your pip movement that is actually telling you the amount that you lose. So the best practice, mostly we go for 1:100 most of the time. 1:10 sometimes we suffer, but if you have your money is very small and you want to trade maybe with a higher volume, maybe you have a good precision, you are good with your trading analysis, and once it hits, that is all. You can go for a higher leverage and take advantage of it. But at the same time, the higher your leverage, it means if you don't take care, it's possible you may also lose most of your money or even all your money. So let's take this example. You are having $100. With $100, they are saying you can control with 1:100 leverage. The broker is offering you this leverage. It means if you have $100, you can control $10,000. You can control $10,000. How? You just multiply this 100 by what you have by what the broker is offering, and you get the amount. And this particular amount, maybe for Bitcoin, for you to place that particular trade, they are requiring this. They expect you to have at least $10,000 in your account. That is why these things are there. Then the last part is the margin. So for the margin is the amount of money your broker holds as a deposit to keep your trade open as collateral. You understand? So let's take this one. If you open a 10,000 trade with 100 leverage, meaning what you are supposed to at least have required margin, you are supposed to have 100. Maybe the trade actually requires you to trade with $10,000, which means you are supposed to get $100 in your account because the broker is offering you 100 times of it, which is the 10,000. But once your account goes below this, it means you don't have the required amount to trade this $10,000. You understand? And that is, sometimes you get a message, margin call, like you get all these messages. And sometimes some of the brokers, they will just reduce your lot size, like just to fit just to make sure you are still in the trade. And when it becomes worse, they will just close the trade and at least stop you out. Exiting you from the market is what they call the stop out. So margin is very, very key. Whenever you are trading, you see all those things. And if your money is not enough and you are placing a particular trade, maybe using a bigger lot size, they are going to stop you. All right, so let me take this opportunity and at least take you to the chat. Let's see something. Let me delete this one. Okay, so assuming I want to trade from this part, maybe when the market got here, I wanted to place a trade that is long. If you were expecting the market to go up, it is long, or you are buying. Like when you buy, you are expecting the price to appreciate, price to go up. So assuming I want to buy, I use the long. So here it is. As explained earlier, I have already explained this part, the stop loss and the target or the take profit. Here is the take profit. So I just want to take my profit around this zone. Once price gets, or just this line, once price gets to this point, at least they should take me out and give me my money, whatever profit I make. And the profit part is like here, I bought this pair is pound USD. So I bought pound USD around this session. And I'm expecting price to go up. So once price is going up like this, I'm in profit. As you can see that I have this going up. So actually my pound is in profit. It means because I bought pound at a very low price, around this session where price has appreciated, even if I sell now, I sell my pound, I'll get more profit. But if I'm able to wait for it to hit here, it means my profit actually increases. So sometimes you have to be patient about it. You just have to wait. So for me to enter the trade, let's say if I click on this, I highlight this one, you can see that I have two amounts. First amount here is the target. This is the target, this line. They are saying if price is able to reach this place, I'm getting 103,321, 103,321. And around this particular session too, you see that there is another one that is in red. That is the stop. It means when price goes against me, because right now I'm saying the market should go this direction. But if the market turns and goes against my direction, when it gets to this particular place, they should take me out. Maybe I have about $1,000 in my account and I've made it in a way that if it gets to this point, I should lose about $10. But here, the loose amount is then 99,000. If you are losing, you are going to lose this particular amount, this 99,000. So that is the stop amount or the stop loss, what you are actually risking. And before I can make sure this amount, I can lose this amount and I can gain this amount, when I enter the market, I have to enter with a particular top, I have to enter with a particular lot size. Here, I can't see the lot size on this particular chart. Yeah. So they will give you a particular lot size. Maybe if I'm entering the trade, I should use 2, like the volume, like 2 for it. If I'm able to place with 2, then possibly once it gets here, I will lose this. But if you go with a different amount, it will affect it. And that is it. So for stop losses, because these things are there, automatically when you use this price range, the long and the short, they actually calculate the shorts and the shorts, your lot sizes and your pips for you, and you don't have to be worried about those calculations. Okay, my recommendation is, if you want to learn more, read more about Forex, you can go to justbabypips.com. If you type babypips.com, then you click on Learn Forex. Yeah, once it opens, like when you click on Learn Forex, you can just click here, start learning, and they are going to walk you through a lot. It's very well structured, and you are going to at least learn a lot. Yeah, but what I'm doing now, I'm just giving you the simple, what you can go with, what you can start with to make things simpler for you. Okay, we will, this video too, I think it's okay. Comment, share. I would like to hear from you. Let's have your views at least and know what to at least tackle in the next video. All right, so kindly watch out for the next video, and please don't forget to hit the subscribe button. Merci beaucoup. Au revoir.